This video, we're going to talk about what a pain trend following and trend following when you have a big winner on can be, which might be counterintuitive, but I'm just going to start ranting. So I'm going to start doing these videos more where I just kind of have something pop into my head or a conversation that we have in our Discord room over at Stats Edge Trading, and take that and rant to you guys at it. So again, let me know what you think. But the conversation had started and the conversation happened because of this hymns trade. So I talked about this one on Monday as well. Basically said that if we got back through this price right here or we pulled back to this price right here, I would take a trade. This was our trade of the week from all of the trades that the system had presented. Because it had triggered on Monday, but earnings was the next day we were waiting. So obviously got that price, got around 41 bucks, ripped up to 50 bucks. An amazing trade to get started with. So, what's the pain, right? What's the pain point in this? Well, the question is always, what do you do next? And there was some talk in the room. I got some private messages as well saying, okay, so what are you doing with this? We made an amazing gain on it. And my answer was nothing. And this is where the hard part becomes because right now, Hims is in a situation where for me and my system, this could turn out to be a losing trade. And it's because we're using a trailing stop, in this case, a moving average trailing stop for this particular system, which means that we could have an amazing trade, but we could pull back and we could stop out all of these gains that I have, which is from a percentage basis. I didn't even really look yet, but from a percentage basis, yeah, like 20 something percent gain in a single day could completely go away. And I think that's really the pain that a lot of people don't talk about when it comes to trend following. So what happens is when you're trend following, you're buying some sort of breakout or continuation in a pre-existing trend. To be a trend follower, that means you have to have a number of winners that end up working out. And let's go over here and just talk about this. Isn't this trend following system's back test, but this is the one that I'm working on now. And the equity chart, if you go out till 1995, looks amazing, right? This is a great looking equity chart. However, you have to zoom in to always when you're looking at these charts, especially the one I have the chart and the monthly performance of every strategy that we are running currently on my website at statsedgetrading.com. So if you're interested in trading with a systematic edge, then go to statsedgetrading.com, check them out. Make sure you actually absorb, you don't just look at it and say, well, line go up, this is something I want to trade. So for example, 2008, 2009, there was no profits here, right? There was a year here where very little profits took place. There's a year here where the whole year in 2020, you're pretty much down until the very end. You made a bunch of money, right? So the ability to continue to do the correct thing during periods of time where you're not making equity gains becomes really hard because that's kind of what we're seeing this year, right? And the reason I brought this here is just to show that this is a 47% win rate, right? So you're wrong more often than you are right. And I think most people are okay with that part of it. And I think most people can even be okay with the part of it that I'm going to be wrong and lose a little bit of money. And I'm going to be wrong and I'm going to lose a little bit of money. The problem, I think, comes on the other side of things. When they're right, holding on to that winner. And it seems kind of counterintuitive, but as soon as you are up 20, 30% on a trade, especially in a single day like that, the temptation to take profits is really high. But the only way we get those equity curves where nothing happens for a long period of time and then you get this massive spike is by making a huge gain every now and then. That's what trend following is looking for. Is every now and then you make a massive gain, and that gain sometimes can be, one, two, three, 400%, but it's going to happen like 5% of the time, if that. So that's really where I think the pain of trend following comes in. And the reason for this rant is just to show you guys, the reason we trade multiple strategies. There's some people out there simply cannot handle that mental burden of trend following. They cannot buy something and just watch the P&L go from maybe 0 to 100%, only to know that they could give half of that back before they get stopped out of the position. And that is hard for a lot of people to not take the profit when they see it. Well, thankfully, for that type of person, there is mean reversion. Mean reversion often is doing the exact opposite. It is looking for a stock to come down. You're being really try to laser focus on where your price is, and then you're out very quickly after. You're taking profits on a consistent basis, and you're compounding your account with pullback trading or mean reverting. But it's going to have the opposite side of things where every now and then you're going to take a small profit on something. You're probably going to be right more than 50-50 with most mean reverting setups, but you're going to take a small profit on something, and then that thing is just going to completely moon without you. So none is right, none is wrong, none is good, none is bad. The question is, what is it that you are okay mentally doing? Holding on periodically for a massive gain, or are you someone who wants to take very consistent winners and often leave a whole bunch of money on the table? Now, the reason we do both, the reason we do all of them, is because I find them personally, mentally, the more systems I run, the easier all of this is, because yes, I have this hymns trade on. Yes, it's a big winner. Try not to look at it too much, helps as well. But what I end up doing is I've got a lot of other trades going. We are building day trading systems over at Stats Edge Trading. So very soon, in the next week or so, uh, there will be systems that take advantage every day. The system I just teased to you guys is another daily system. It does about a trade a day. I'm looking at the numbers. That's probably not going to be distributed perfectly, but on average, about a trade a day. Um, these kind of systems help with those other systems where I'm okay holding a basket of things that I'm potentially going to be up big on and could reverse on at any time if the other thing happens where I have these more consistent systems. So another final example here is, I've talked about this a few times, but our Palantir trade, right? So we have Palantir from, somewhere, let's find the exact date. So this is the 1st of April, right? So this is where the system rotated into Palantir, and so 84 bucks and all the way up to 120, and now it's back down to 100. And this is another longer term system. There's no stop loss and there's no profit target in the system. We simply rotate into the strongest stocks over and over again. So it means, even though at one point I was up, what's that, 50% or so on Palantir, it could be a loser. So you have to be okay with this in order to get those big wins. You have to be okay with these drawdowns. So a bit of a rant, but I hope this helps. When it comes to people who aren't interested in coming over to Stats Edge and having all these systems to choose from, but you're building your own thing, the takeaway I think for those people is you have to understand that there is no perfect system. There is only a system that will work with your own mentality. So if, looking at that Palantir chart or that HIMS chart and knowing that you could potentially give all that profit back makes you nervous, great. Now you're a little bit closer to building your own system where you can't deal with that type of loss from an equity high. You just can't do it. It's totally fine. There's nothing wrong with that. You just then need to design a system that either has a tighter trailing stop, which means you're going to get pulled out of that trade quicker, knowing that it could, turn around and then moon after that. Or if you're someone like I talked about when I was talking about mean reverting, saying, you're going to buy something at 10, you're going to sell it at 11, and then you're going to have to be okay looking back and it being at 20 every now and then you go with the other side of things. So either become systematic, trade them all, or find the one that makes the absolute most sense to you and really become an expert at that thing.